So today's topic, accounting for leases. Last week we finished income tax, right? Income tax kami bagi kita kena kata. Kita kata apa?
Page 9.
Okay. So then we first finish that part. Okay. With LKS 12, there we discuss the accounting treatment for deferred tax. So the deferred tax asset, when a deferred tax asset create, deferred tax liability create, income tax expense credit, debit, deferred tax liability credit. When the deferred tax asset create, deferred tax asset debit, income tax expense credit. So we discussed that. Then how to calculate the deferred tax liability, the taxable temporary difference multiplied by the tax rate. If the temporary difference is deductible temporary difference multiplied by the tax rate, you can have the deferred tax asset. Taxable means in the future it will create more taxes, so it's a liability. Deductible means you can deduct this in tax calculation, so it is asset, right? So we had exercise 2. That is where we stop. Right. So what we discussed basically, when you are given deferred tax liability and deferred tax asset, the simple double entry we discuss how to account. Then second exercise, when you are given taxable and deductible temporary difference, taxable temporary difference multiplied by the tax rate, we can have the deferred tax liability. Deductible temporary difference multiplied by the tax rate, we can have the deferred tax asset. Then we can account for it. Then how do we determine this taxable and deductible temporary difference? Because these are not there in the accounting records. So the determination of taxable and deductible temporary. Now this is where you need to understand the concept. And there's something you have to remember. The taxable and deductible temporary difference, we are comparing value of asset and liability, carrying amount and the tax base. Carrying amount means accounting record. As per the accounting record, what is the value of asset or liability? Tax base means if you maintain accounting record as per the tax law, what is the value of asset or liability as per the tax law? Right? So carrying amount you can find from the accounting record. That is the accounting value. Well, tax base you have to calculate. Then make the comparison. When you take any asset, if carrying amount is greater than tax base, then we call it the difference is taxable temporary difference. Carrying amount of an asset is greater than tax base. How to get this? We take simple example. We purchase a machinery for 10 million and useful life 5 years. Accounting purpose, we depreciate 20%. But Inland Revenue Act, they are giving some special rate for different type of asset for the depreciation. So, suppose that this plant and machinery, you have depreciate 50% for tax purpose. That is the tax allowance. Tax depreciation 50%. You have depreciate within 2 years. Accounting purpose, you depreciate over 5 years. So the carrying value of the 10 million asset after 1 year, 10 million, annual depreciation 2 million, 8 million. But the tax base, tax purpose, you depreciate 50%. So 10 million, 50% means 5 million. So you have a carrying value of a machinery 8 million, tax base is 5 million. Now carrying amount 8 million, tax base 5 million, carrying amount greater than tax base. So we recognize it as a taxable temporary difference. So that taxable temporary difference multiplied by the tax rate, you get the deferred tax liability. So this first point you have to remember. It is like when you learn the double entry system. Asset increase debit. Okay, remember that when you know asset increase debit, all other you can relate with them. So if asset increase debit, decrease credit. Asset and expenses same way, right? So if the asset increase debit, expense also debit. Equity liability and income, other side of the equation, the opposite. Likewise, if you know when you compare asset, if carrying amount greater than tax base, resulting difference is taxable temporary difference. I mean, double entry system, why asset increase recorded debit, there is no rationale. Right? Debit is the left hand side you record. That is how the practice goes. Right? But when it comes to this, there's a rationale for this. Why carrying amount greater than tax base become taxable temporary difference? Now take my example. We purchase a machinery for 10 million. Accounting purpose depreciate 2 million, 2 million, 2 million over 5 years. Over 5-year period you depreciate. Tax purpose, you depreciate 50%. So now carrying amount 8 million, tax base 5 million. Because carrying amount 2 million depreciated, tax purpose 5 million depreciated. So from accounting point of view, there is 8 million to be depreciated in the future. That is the carrying amount. You can deduct in profit calculation 8 million in the future. But tax purpose only 5 million. Next year you can depreciate 5 million, that's good. Then what will happen in the future? Future for tax purpose you have to depreciate less. That means future tax profit will be higher compared with the accounting profit. So compared with the accounting profit, you are paying more tax. What happened into this scenario? Accounting purpose you depreciate 2 million over 5 years. But tax purpose you depreciate first year 5 million, second year 5 million, that's all. Then what will happen? First year and second year you are paying lesser tax. Lesser tax. Because you depreciate more, taxable profit less. So you are paying lesser tax. But third year onward, tax purpose no depreciation, fully depreciate. Compared with accounting profit, we still depreciate 2 million. So third year onward, we have to pay more tax compared with the accounting. So when the carrying amount of asset is greater than tax base, that is the scenario. In future, we have to pay more tax. Now we are paying lesser tax compared to the accounting profit, but in the future you are paying more tax. So we recognize deferred tax liability. So deferred tax liability recognized, so this difference is called taxable. This difference is taxable, making very protection. 8 million and 5 million difference, carried amount 8 million, 5 million tax base, difference 3 million. 3 million is taxable temporarily. Right? That is the rationale. Rationale like the mataka nathi una. Right? Now remember karagato asset carrying amount greater than tax base, taxable temporary difference. Then for an asset, if the carrying amount less than tax base, the other way, it's a deductible difference. That leads to a deferred tax assessment. Deferred tax asset and liability. So if the carrying amount greater than tax base is taxable, then the carrying amount less than tax base is deductible. Similarly, liability. The liability opposite way. So the deferred tax adjustment related to asset and liability. Right? So if the liability carrying amount greater than tax base, the opposite of asset. Asset carrying amount greater than tax base is taxable temporary difference. Liability carrying amount greater than tax base, deductible temporary. Liability then carrying amount less than tax base, taxable temporary. Right. So the next exercise, you were given carrying amount and tax base. So the global BSAA incorporated 1st April 2021, again newly started business. So there is no opening deferred tax liability of asset. So first year ends on 31st March 2022, second year 31st March 2023. Income tax paid under self-assessment 600, 500. Total income tax liability 925, 800. Carrying amount, plant and machinery, tax base, plant and machinery. The carrying amount motor vehicle, tax base, motor vehicle. Income tax rate given 30%. You have to prepare the income tax expense account, deferred tax asset, deferred tax liability. Prior to that, we can calculate the deferred tax asset and deferred tax liability. For that first. Exercise 2.
Yeah.
So it is the relationship. When a carrying amount of asset is greater than tax base of asset, the result difference is taxable temporary difference. asset carrying amount. Again, accounting book value figure. Tax value figure ready enough when it's a taxable figure. If the tax base is greater than the carrying amount, right? And the tax base is greater than carrying amount, then the difference is equal to deductible temporary difference. So the asset create this particular activity, you are given
Screen sharing Galle.
yeah.
Screen sharing.
You can see this. Right? So this particular activity yeah. Yeah, that's everything. So now for example.
Recording.
Starting a record. Next. Now those who joining online, you can see this. My screen is shared. So this is the activity we are taking. Now you are given plant and machinery carrying amount 4 million 2022. Asset 31st March 2022 carrying amount 4 million, tax base 3 million. Right? 4 million and 3 million. Right? Carrying amount 4 million, tax base 3 million. Second year, carrying amount 2 million, tax base 0. Right? Now we have first calculate by comparing the carrying amount and tax base. If I take plant and machinery first, we can find the difference. Right? So plant and machinery, first year carrying amount 4,000. Tax base 3,000. That is given in the question. Now the carrying amount of an asset is greater than tax base. So we have a difference of 1,000. So this is where I have to decide. If you made a mistake here, you will take wrong calculation because the difference is the taxable. Right? That's why I told you need to remember this part. When you take an asset, if carrying amount of an asset greater than tax base, the difference is taxable temporary difference. That you have to remember. Carrying amount of an asset, carrying amount means accounting value, book value. Tax base means the value as per the tax law. Right? Here you are given it. So carrying amount 4,000, tax base 2,000. So now carrying amount greater than the tax base. Okay, those who join online, can you? Yeah. Those are joining online. Yeah. That is sir. No. That might be. Okay. Right. So there's 1,000 difference. Now that difference is taxable. I mean, this format that is mentioned, but you should know that part. That is why you have to decide. Right? When you compare the asset carrying amount and tax base, if the carrying amount greater than the tax base, The resulting difference is taxable temporary difference. මේක ඔයාලා තීරණය කරන්න. මේ compare කරලා වෙනස taxable ද deductible ද. Then multiply it by the tax rate 30%. So you get the deferred tax liability. Yeah. Second year, carrying amount and tax base. Now, in the first year you identify taxable, it won't change. For a particular asset, initially create taxable temporary difference. Either it will increase or decrease. That's how it works. Right? The Halloween taxable now, it is taxable. So now the difference is 2,000. Is also taxable. Multiplied by the tax rate. So the deferred tax liability 300 first end of the first year, 600 end of the second. Then we have motor vehicle. Motor vehicle carrying amount 2,000 first year, tax base 2,400. So we take motor vehicle carrying amount 2,000, tax base 2,400. Now tax base of an asset is greater than tax base is greater than carrying amount. When tax base is greater than carrying amount, the difference is deductible temporary difference. Take this 400 difference as deductible temporary. So multiply it by the tax rate 30%. You get the deferred tax asset. On 20 deferred tax. Similarly, second year, 1,000 and 1,800. Carrying amount 1,000, tax base 1,800. Now the difference is 800. multiplied by 30%. So taxable, deductible temporary difference 800. So the deferred tax asset become. Okay, any question? You need to compare carrying amount, the book value of an asset, and the tax base of an asset. If the carrying amount, the accounting value of an asset is greater than tax base, the resulting difference is taxable. If the tax base is greater than carrying amount, the resulting difference is deductible temporarily. දැන් මේ වෙනස සමහර වෙලාවට permanent වෙන්න අතර නමුත් දැන් මෙතන අපිට පේනවා මේ depreciation නේ. Tax purpose depreciates less number of years, accounting purpose another number of years. So property, plant and equipment item, the difference between carrying amount and tax base is always temporary. Because over a particular period, tax purpose also it is depreciated, accounting purpose also it is depreciated. Right? So when you take an asset carrying amount as a tax base, if the asset carrying amount greater than tax base, the difference is taxable. Taxable temporary difference multiplied by the tax rate to identify the tax value. When you compare carrying amount of asset and the tax base, when the tax base greater than carrying amount, difference is deductible temporary difference. Deductible temporary difference multiplied by the tax rate, you get the deferred taxes. Now we can go to the accounts, the accounting records. We had this calculation. Then we can prepare the income tax expense account for 2 years. 21, 22 and 22, 23. Then the deferred tax liability account, deferred tax asset account. Even we can prepare the income tax payable account also. Right? අපිට මෙන්න මේ accounts ටික හදා ගන්න වෙනවා. Income tax expense, income tax payable to 21, 22. 2 years payable. Deferred tax liability, deferred tax asset. And have the T account. There is a problem. What about the February 4th? I'll check with you.
Pendant.
Yeah, that's right. On the February independence, so that's why I thought that there won't be lecture. Right? So I into the 11th. But if the 11th, no lecture, we have 12 weeks. If they make, if they are fitting the calendar, academic calendar, then no issue. So now this is the third session. Third session. Right? Next week is the fourth. Six. Both fifth and sixth meeting. So we can take it because I don't think that we have any other alternative time slots also during the weekend, right? Yeah, yeah, fully occupied, no? We can have four sessions. No? I think I will check. Right. Now the first income tax paid under self-assessment in the first year 600. You know the double entry, the tax paid, cash credit, debit tax expense account. Right. Tax paid under self-assessment, cash credit, tax expense debit. Then you are given the total income tax liability. Total income tax liability 925. 925 for the year. Out of 925, we have already paid 600. So 325 payable. That you get debit tax expense. Credit income tax payable. Income tax expense debit, tax payable, credit, credit. Okay. And this is normal income tax entries, right? Tax paid under self-assessment, cash, credit, tax expense, debit. End of the year, you calculate the total income tax liability. Total income tax liability 925. Out of that, 600 already paid, 325 payable. That would debit tax expense, credit tax payable. Then end of the first year, deferred tax liability balance, we have already calculated it. Deferred tax liability 300. And deferred tax asset 120. Newly started business, there is no opening balance. So you can carry forward deferred tax liability account balance to next period. Carry forward deferred tax liability 300. Right? And 300 carry forward when the opening balance එකක් නැත්නම් මේ අවුරුද්දේ අලුතෙන් ක්‍රියේට් වෙන්න ඕනේ 300 මම මේක අපව ලයින් එක ගහලා ඉවර කරන්න ඕනේ නැහැ. You know that no opening balance. Now we have a balance carried forward 300 to next year. Then carry forward brought forward 300. That means during the year create the carry forward balance. So during the year creation of deferred tax, you can credit deferred tax liability, debit income tax expense. That is the third date. 300. When a deferred tax liability create, deferred tax liability account credit, income tax expense debit. Is that right? We create a deferred tax liability. Similarly, deferred tax asset carried forward balance 120. No opening balance. there should be a deferred tax asset creation. You can debit that into deferred tax asset. Credit income tax expense. So then you can balance the income tax expense account and find the tax expense charged to P&L for the first year is 1,105. And this tax payable account, you can carry forward this balance to next year. And deferred tax liability account, you can have this 300 balance brought forward from the previous year. Deferred tax asset 120, you can have the brought forward balance. In the second year, so given second year tax paid under self-assessment 500, total income tax liability 800. So tax paid under self-assessment 500. Credit cash, debit tax expense. Sorry, prior to that, this last year payable, we have to settle first. You have first pay that one. Tax payable 325, we pay that. Cash, credit, debit, tax payable. Right now, sometimes actual payment, if there's a difference, that is where you recognize under provision for income tax. Right? Here our focus is to discuss deferred tax. So I'm taking the 325, actual payment also 325. Then the second, you are paying for the self-assessment during the current year. 3 quarters. First, second, third quarter, 500 paid. And the total income tax liability for the period is 800. So 500 already paid. Total liability 800 means 300 payable. That you can debit tax expense, credit tax pay. Then the deferred tax liability and deferred tax asset end of the second year, liability 300, asset 240. That is the carried forward balance. So deferred tax liability carried forward balance is 600. Deferred tax asset carried forward balance is 240. Opening balance 300, liability opening 300, closing becomes 600. So during the year, newly created deferred tax liability is not 600, 300 difference. First year no opening balance, so closing balance 300, created 300. Now 300 increased to 600. So there's a 300 deferred tax liability creation. Debit tax expense, income tax expense debit, deferred tax liability credit. Similarly, asset also, opening balance 120 now increased to 240. So another 120 creation. Debit, income, deferred tax asset debit, income tax expense credit. So now you balance this tax expense account and identify the tax expense charged to P&L. It's line A. So tax payable account carried forward balance is 300. Okay. Can someone just ask the IT person? My screen is sharing. Okay. So can you complete the rest? Right? Now we prepare the tax expense. Right? First year we finish the tax expense. Right. Okay. Right. You can see second year deferred tax liability increased from 300 to 600. So newly created share is 300. I said 240, 120 to 240 increase. So deferred tax asset debit, tax expense. Any question? Okay, those who join online, can you hear me? Yes. Those who join online.
Yes, sir, we can hear you.
Those who join online, can you hear me?
We can hear you.
අවුල් ගියා ඒකේ කනෙක්ෂන් එකේ ප්‍රශ්නයක් ආවා. දැන් මට මේකෙන් යන්න නම් පුළුවන්. මොකද මේ මට චෙක් කර ගන්න ඕනේ මේ. ඇහෙනවනේ. හරි. එහෙනම් ප්‍රශ්නයක් නැහැ. මේක රෙකෝඩ් වෙනවා. right. Okay, sure. Right. So this is better, right? So we are moving to the next. So we can show the financial statement extract, the first year and second year income tax expense. We can show this. First year tax expense 1,105. So you can see that what is we charge to PNL is not the total tax paid to the inland revenue. Actual payment in the first year is 300 plus 600 plus 325, 925. But we charge to PNL 1,105. That is because of the deferred tax adjustment. Secondly, actual payment 800, but we are charging 980. Right? Then here you take the PPE. You can show the property, plant and equipment. You are given the carrying amount. So that also financial statement extract. So I add the two carrying amount of first year 4,000. Carrying amount of plant 4,000. A motor vehicle 2,000. Second year 2,000 and 1,000. Can have the property, plant and equipment value. Then the deferred tax asset and deferred tax liability. Right. So up to this point, what we discussed, creating deferred tax asset, creating deferred tax liability. So this deferred tax asset liability create and subsequently reverse. Even though this deferred tax liability we record it as a liability, we are not going to settle it never. Because actual tax payment to inland revenue is what we paid under sales assessment and what is payable. Right? This deferred tax adjustment is just a book entry to make our tax expenses to be more in line with the accounting standard. To be more in line with the accounting profit. So the creation of the deferred tax, now here you have the 600. Next year it can reduce to 450. If it is reduced to 450, then deferred tax liability debit, income tax expense credit. So it's very simple. When you calculate the deferred tax asset and liability year-end balance by multiplying taxable temporary difference into tax rate, deductible temporary difference into tax rate, you can identify whether the tax liability increase or decrease. Corresponding other entry always goes to income tax expense account. So deferred tax liability account and deferred tax asset account. If you are debiting or crediting anything, other corresponding entry should always go to the income tax expense account. And deferred tax liability credit වෙනවා නම් debit වෙන්නේ income tax expense. Deferred tax liability debit වෙනවා නම් credit වෙන්නේ income tax. Right. Asset එක debit වෙනවා නම් credit වෙන්නේ income tax expense. Deferred tax asset credit වෙනවා නම් debit වෙනවා tax expense. Right. There is no other way. So anything that you debit or credit to deferred tax liability or asset account The other corresponding entry always go to the tax expense account. With that, you can attempt exercise 4. Here, income tax paid for the year and income tax liability for the year. Then the carrying amount tax base. Carrying amount tax base. So by comparing this, you can first calculate taxable and deductible temporary difference. Multiply it by the tax rate, you can find deferred tax liability, deferred tax asset. Up to now, all the activities we work out, you are given the first year after incorporation. Now the fourth exercise, it's a continuing business. So you are given the income tax rate 30%, deferred tax liability and deferred tax asset as at 31st March 2021, beginning of this year. 450 and 500 respectively, that is given. Right? So we can first have the schedule that we prepared to calculate the taxable deductible temporary difference. Now, plant and machinery carrying amount 3,000. Tax base 0. There's a 3,000 difference. Taxable or deductible. Plant and machinery first year, 2022. Carrying amount 3,000. Tax base 0. So difference 3,000. Carrying amount greater than tax base means it is taxable. Multiplied by the tax rate, you can find the deferred tax liability. So we can have it like this. Exercise 4 වල carrying amount of the plant and machinery 3,000. Tax base 0. So difference is taxable. Carrying amount greater than tax base, difference taxable temporary difference. Multiplied by the tax rate 30%. We can have the deferred tax liability. Second year, the carrying amount reduced to 2,000. Tax base 0. The tax වලට fully depreciate වෙලා තියෙන තුර ඒක වෙනස් වෙන්නේ නැහැ. Then 2,000 into 30%. 600. This is the first calculation, right? Carrying amount and tax base given. You compare the difference. Carrying amount of asset greater than tax base means the difference taxable temporary difference. Accounting records වල තියෙන asset එක value එක tax වලට එන value එකට වඩා වැඩි නම් carrying amount එක වැඩි tax base එකට වඩා. ඒතර වෙනස taxable. ඒක tax rate එක වැඩි කරපුවාම පාට වෙනවා So likewise, you can have the motor vehicle. Now, motor vehicle carrying amount 0, tax base 2,500. So carrying amount 0, tax base 2,500. So tax base more. That means the difference is deductible. Multiplied by the tax rate 30%. You will get the deferred tax asset. When it's come to the 2023, carrying amount fully depreciated, now it is 0. It won't change. Now the tax base reduced to 2,000. So deferred tax asset 600. right? Now we can prepare this income tax expense, tax payable, deferred tax liability, deferred tax asset. Here we have an opening balance of deferred tax liability 450, deferred tax asset 500. So when you prepare the accounts, right? We can show the deferred tax liability opening balance, which is given. Liability we have 450. Deferred tax asset 500 is already available. So the rest is same as the previous activity. Tax paid under self-assessment 500, total tax liability 825. So 2022 tax paid under self-assessment, cash credit, tax expense debit. Total 825, so 325 tax expense debit, payable credit. Now end of the first year deferred tax liability, we calculate it 900. So liability carried forward 900. So opening balance 450 increased to 900. So we have newly creation of deferred tax liability 450. Tax expense debit, deferred tax liability credit. මේක balance කරලා අපිට හොයා ගන්න පුළුවන්. 450 තිබ්බ 900 වලට වැඩි. Deferred tax asset එක 750 වලට වැඩි වෙනවා. Carried forward balance of deferred tax asset 750. So the creation of deferred tax asset is 250. 500 increased to 750. 250. Income tax expense debit, deferred tax asset credit. So we can recognize tax expense charge for the 2022, 1025. Tax payable account, we can carry forward the balance. Balance carried forward 325, brought forward to next year 325. Deferred tax liability account, can have the balance brought forward 900. Deferred tax asset account balance brought forward 750. Right. The second year, tax paid under self-assessment 650. Total tax liability 850. Now this 325 last year payable we have to pay first. So we can credit cash and debit. Then 23 self-assessment payment 650. Credit cash, debit tax expense. Then the payable total liability 850. So 650 paid means 200 payable. Tax payable credit, tax expense debit. Now the deferred tax liability 600. 2023 balance carried forward 600. $900 decreased to 600. So you have to debit deferred tax liability account. Then අපිට මේ account එක balance කරන්න තියෙන සාමාන්‍යයෙන්. 900 opening balance එක තිබුණා closing එක 600 වෙනවා. එහෙනම් මෙතන debit වෙන්න ඕනේ 300. That means it should credit to the income tax expense. එක අපි credit කරනවා tax expense එකට. That is deferred tax liability reversal එක. Deferred tax asset also, when you calculate the year-end balance, it is 600 now. 750 decreased to 600. There's a 150 reversal. And deferred tax asset debit නෙමෙයි වෙන්නේ credit වෙන්නේ. When you are crediting deferred tax asset, have debit income tax expense. Anything we debit or credit to deferred tax, the corresponding entry go to the income tax expense account. That's it. 750 150 අඩු වුණා නම් 150. Take the reverse. So you charge to P&L only 700. That's it. So tax expense recognized for the first year 1025, second year 700. ගානේ අපේ PP carrying amount දීලා තියෙන නිසා මම ඒ ටික එකතු කරලා ගත්තා 300 and 3000 and 2000. Deferred tax asset 750 600. Deferred tax liability 900 600. This tax payable balance first year 325, second year 200. Those are the financial statement extracts. Right? Okay. Right. So now we know the how to account for deferred tax asset and liability creation and reversal, and how to calculate the deferred tax asset and liability based on carrying amount and the tax base. But even this activity, carrying amount and tax base given to you. But practically business, right? From the accounting, you have to calculate the carrying amount. You have to calculate the tax base. So based on accounting rule, you can calculate accounting standard application, you can calculate the carrying amount of asset or liability. Based on the application of tax law, we can calculate tax base of asset or liability. So we'll move to the next activity, right? Exercise 5. Candy PLC incorporated on 1st April 2018. On the same day, plant and machinery and office equipment were purchased, costing 12 million and 6 million respectively. Plant and machinery 12 million, office equipment 6 million. Plant and machinery are depreciated 20% per annum for accounting purpose and 50% per annum for tax purpose. එහෙනම් අපිට පුළුවන් දැන් මේකේ අවුරුදු 5ක් තියෙනවා. Over the entire period, we are taking carrying amount and the tax base of plant and machinery. Carrying accounting purpose 20%, tax purpose 50%. Right? අපිට මේක then plant and machinery cost එක 12 million. 12 million. Accounting depreciation 20%. That is 2,400 per annum. Tax depreciation 50%. That means 6,000 per annum. So the first year, you can have the carrying amount 9,600, 12,000 minus 2,400. Second year reduced by further 2,400. Likewise, it continues. So the carrying amount 12,000 reduced by 2,400 per annum, 20% depreciation, right? අවුරුදු 2,800 ගාන depreciate වුණාම 12,000, 9,600, 7,200, 4,800, 2,400, 23 fully depreciated. Tax base 50%. No. That means end of the first year, it reduced to 6,000. Second year, it is fully depreciated. Once it is fully depreciated, so the value remains 0. Now just take the first year. Carrying amount 9,600, tax base 6,000. Carrying amount of an asset is greater than tax base. So the difference is taxable temporary difference. Taxable. So multiply it by the tax rate. Tax rate given 30%. So taxable temporary difference multiplied by the tax rate, you can have the deferred tax liability. Right? පළවෙනි අවුරුද්දේ 1,080, දෙවෙනි අවුරුද්දේ 2,180, තුන්වෙනි අවුරුද්දේ 1,440. 720 මේ deferred tax liability එක create වෙලා අඩු වෙලා reverse වෙලා 0 වලට යනවා. Right? ඔය එක තියෙනවනේ අපිට ගාන හදන්න පුළුවන්. මෙතනම ඕනනම් පෙන්වන්න පුළුවන්. දැන් පළවෙනි අවුරුද්දේ 0 ඉඳලා 1,080 වලට නෙවෙන්නේ. එතන වෙන්නේ creation එකක්. පළවෙනි අවුරුද්දේ 1,080 වලට deferred tax liability එක අලුතෙන් හැදෙනවා. දෙවෙනි අවුරුද්දට යද්දී 1080 to 2160 another creation. Third year 2160 decreased to 1440. So it's a reversal. 1440 decreased to 720. Reversal. And final to see. Similarly, you can complete this type of table for office equipment. Office equipment cost is 6,000. Accounting purpose 33.33. That means 1/3, 2,000 depreciation. Tax purpose 20%, 1,200. Can you complete the same table for office equipment? Office equipment මේ වගේම complete කරගන්න. That means you know how to calculate the deferred tax asset or liability. Carrying amount එක ගන්න, tax base එක ගන්න. වෙනසෙන් අඳුන ගන්න ඕන taxable or deductible temporary difference multiplied by the tax rate. You can have deferred tax liability or asset. The question you can ask. Same table you can prepare for the office equipment. Okay. So it should end like this. Now, 6,000 minus 2,000, carrying amount of the first year 4,000, tax depreciation 1,200, so tax base 4,800. So the difference is 800. Now carrying amount less, tax base more, so which is deductible temporary difference. Multiplied by the tax rate, you get the deferred tax asset. By second year, it has reduced to 2,000 carrying amount, what the depreciate. Tax base 3,600, so deductible temporary difference 1,600. So tax deferred tax asset 480. By third year, it is fully depreciated for accounting purpose, but tax base still 2,400. So difference 2,400. So first 3 year deferred tax asset create, increase by 240, 480, 720. But third year it reduced to 360 and last year becomes 0. And to make it simple, since we are preparing it for the entire 5-year period, question says income tax for each year is 2 million and which is paid during that year. Forget about that payable part, right? Just take every year the tax we pay to Indian revenue is 2,000. That is what question says. Total income tax liability for each year 2 million and which were paid during the same year. So because here our focus is to understand the deferred tax adjustment. Now can you prepare? Now you identify the deferred tax asset and deferred tax liability here. So you can prepare the tax expense account, deferred tax liability and deferred tax asset account. No need of having the tax payable. And every year payment is 2,000. Following entry අපිට ගන්න පුළුවන් cash credit, tax expense debit 2,000. Then you have to make adjustment for the deferred tax. Right? So we'll take it. Exercise 5. Take it this way. Preparing it for 5 years, right? First year, tax paid 2,000. Cash. That's it. Cash credit, tax expense debit 2,000. Then we have to carry forward deferred tax liability balance, which is 1,080. And deferred tax liability okay, balance carried forward in on 1,080. That become balance brought forward to next year. Deferred tax asset balance carried forward first year 240. Carried forward 240. So first year, there should be a creation of deferred tax liability, no opening balance. So it increased to 1,080. So the deferred tax liability creation 1,080. You can have that 1,080 tax expense debit, deferred tax liability credit. The deferred tax asset, no opening balance, end of the first year, it increased to 240. So there is a deferred tax asset creation by 240. Debit deferred tax asset, credit income tax expense. So first year, when you balance the tax expense account, you charge to P&L 2,840. Cash payment එක 2,000. හැබැයි deferred tax adjustment එක නිසා P&L යනවා 2,840. Second year deferred tax liability increased to 2,160. Deferred tax asset increased to 480. So the second year creation of deferred tax, same as previous year. දෙවෙනි අවුරුද්දේ tax payment එක වෙනසක් නැහැ 2000මයි. And the creation same as previous one. 1080 increase to 2160. එහෙනම් අලුතෙන් create වෙනවා ආපහු 1080. Asset also same. 240 increase to 480. So asset create to 480. 480 240. They create 240. So tax expense account of the second year same as the first year. Right? So you have the deferred tax liability brought forward balance. $2,160. Deferred tax asset brought forward balance 480. Third year cash payment 2000. Cash credit tax expense debt. Now third year deferred tax liability carried forward balance 1440 වලට අඩු වෙලා තියෙනවා. That means there is a reversal of deferred tax liability by 720. Right, reversal එකක් තියෙනවා. So we credit tax expense, debit tax liability, deferred tax liability, reversal. Then the deferred tax asset carried forward balance end of the third year 720. So 480 increase to 720 means deferred tax asset create. Asset create means debit deferred tax asset, credit income tax expense by 240. එතන 240 වලින් deferred tax asset එකක් create වෙනවා. That also credit to income tax expense. දැන් credit දෙකක් එන්නේ. liability එක reverse වුණා, tax asset එක create වුණා. So overall charge to P&L much less amount. 1040. Cash payment එක 2000 වුණා, tax expense එකට යන්නේ 1040. So deferred tax liability now brought forward balance 1140. Deferred tax asset brought forward balance 720. So Now, fourth year, deferred tax liability carried forward balance 720. Deferred tax asset carried forward balance. That means I got the balances 360. And the cash payment 2000. 2000. Tax payment 2000. Now 1440 decreased to 720. So deferred tax liability reversed this year. So 720, you can credit tax expense. And the deferred tax asset also reversed this year. 720 decrease to 360. So deferred tax asset reverse, you credit the deferred tax asset. Debit tax expense now. Charge to P&L. 1640. Here, the last year would be same as the fourth year, right? About asset එක reverse වෙනවා liability එක reverse වෙනවා. පස්වෙනි අවුරුද්ද පෙන්නන ඕන නිසා මම මෙතන මේ පළවෙනි අවුරුද්ද hide කරනවා මෙතනින්. So hope that you all have complete. Right. So we have deferred tax liability brought forward balance 720. Deferred tax asset brought forward balance 360. Tax pay during the year self-assessment 2000. Now carried forward balance 0. Right. Balance එක 0 one. Tax liability එක 0 වෙනවා කියන්නේ 720 reverse වෙනවා. Entire 720 reverse. So deferred tax liability debit, income tax expense credit. Similarly, deferred tax asset now carried forward balance 0. So this is reversal 360. So finally, tax expense account charge to P&L same as the 2021-22 they charge to P&L 1640. දෙවැනි තුන්වෙනි හතරවෙනි පස්වෙනි අවුරුදු ටික තමයි ඔය තියෙන්නේ දැන්. Right? First year මම hide කරලා තියෙනවා. Right. So we'll give you a short break and we'll start. Now we discuss only the depreciation related deferred tax now, right? But you got the concept. So this can be related to any other assets. So we'll continue the discussion in 15 minutes time. Start and continue. Right. So 10:10. Okay, we'll start 10:30. Right. 10:30. Make sure you all be here because we have to finish this and start leasing also today. Right, so we'll continue. Now, we just go through the terminology. Now we can go through the definitions. The accounting profit is the profit before tax. Right? Accounting profit කියන වචනයෙන් කතා කරන්නේ අපි profit before tax. Taxable profit is the profit for a period determined accordance with the rules established by the taxation authority, upon which the income tax are payable. The tax calculation එකට ගන්න profit එක තමයි taxable profit එක. Current tax is the amount of income tax payable in respect of taxable profit for the period. The current tax එක කියන්නේ ඇත්තටම දැන් මේ activity එකේ ගත්තොත් 2000. Current tax. Right. Previous activity, current tax is tax paid plus payable. Current tax. Tax expense means the amount included in determination of profit or loss in respect of current tax and deferred tax both. The current tax එක ඇතුලේ තියෙනවා tax paid plus payable. Right. Then plus and minus deferred tax adjustment, that is called the tax expense. Then the deferred tax liability, the amount of income tax payable in future period in respect of taxable temporary difference. The taxable temporary difference tax rate medical deferred tax liability. Deferred tax asset, amount of income tax recoverable in future period in respect of deductible temporary difference. So we are familiar with that. Right. Then we can take the tax base is the amount that will be deducted for tax purpose against taxable income. When the economic benefits will be taxed. Now the tax base කියන්නේ then just take this previous activity we discussed. Now here, what is this tax base 6,000? That is the total amount will be depreciated in the future for tax purpose. Right. The tax වලට අඩු කරන්න පුළුවන් වටිනාකම tax වලට consider වෙන වටිනාකම තමයි tax base එක කියන්නේ. Right. Now we look at some different scenarios to identify this tax base. First one, machine cost 1,000. For tax purpose, depreciation 30 deducted, current and prior period. And the remaining cost will be deductible for future period, either depreciation or disposal. So cost 100, tax purpose 30 depreciated means tax base of this asset is 70. Right? ඒක අපි දැන් කතා කරපු basic adjustment. Look at the second one, interest receivable has a carrying amount 1,000. Related interest revenue will be taxed on cash basis. So then tax base you can understand if we make the double entry based on tax law. Interest receivable 100. There is a double entry වෙන්නේ accounting වල interest income credit, interest receivable debit. Right? That is how you have the carrying amount 100. Related interest revenue will be taxed on cash basis. That means if you pass the double entry based on tax law, there is no interest income to credit. That means no interest receivable. So tax base is 0. So in the second example, do we have taxable temporary difference or deductible temporary difference? Carrying amount 100. Tax base is 0. Why tax base 0? According to the tax law, there is no interest revenue for the current year. So you can't credit interest revenue, you can't debit interest receivable. So tax base 0. Carrying amount 100, tax base 0 means in taxable temporary difference, which will create deferred tax liability. Trade receivable has carrying amount 100. Trade receivable debit, sales revenue credit, no. Traded revenue already included in the taxable profit. That means for the tax calculation also, you can consider revenue on accrual basis, right? So tax calculation, you credit sales revenue. Tax calculation, tax according to tax law, if you pass the double entry, still you credit sales, debit, trade receivable. So tax base of trade receivable also 100. So when carrying amount 100, tax base 100, there is no temporary difference. So no deferred tax asset or liability, right? So deferred tax is not only related to the depreciation, right? Depreciation is a main area where the carrying amount and tax base vary. But these are some examples, right? Carrying amount and tax base vary. Dividend receivable from a subsidiary having a carrying amount 100. Dividends are not taxable. There are two options to determine. Since the dividend is not taxable, so the accounting profit and tax profit vary, but this difference is permanent nature difference. It's not a temporary, right? Dividend tax වෙන්නෙම නැහැ. So dividend income කවදාවත් tax වෙන්නේ නැහැ. Accounting purpose it will tax, but it is included in the tax profit, but tax purpose you can't. So there cannot be taxable or deductible temporary difference. So if you want to have taxable, deductible, temporary difference 0, you can make carrying amount and tax base equal. So from that perspective, to make there is no difference, when the dividend receivable has carrying amount 100, you can say tax base also 100. So then there is no difference, right? Tax base, you go ahead with the tax rule double entry, right? Dividend receivable debit, dividend income credit. Under the tax law, if you pass the double entry, since dividend income is not taxable, so there is no such income for tax purpose. So you can't credit, you can't debit dividend receivable. In that approach, the tax base of dividend receivable is 0, nil. Then carrying amount 100, tax base 0. There's a 100 difference. But since the dividend is not taxable, you can apply tax rate 0. So there won't be deferred tax liability or deferred tax asset, right? You can see here simple A, right? So you have this. When you take the dividend receivable 100 and tax base also 100, under that analysis, no taxable, deductible, temporary difference. Or alternatively, you can take accrued dividend receivable have a tax base nil. Tax base tax or double entry with no income credit, no asset debt. So then the tax base 0, nil. Then there's a difference. Carrying amount 100, tax base 0, there's a 100 difference. But you apply 0 tax rate. Tax rate is nil. So there is no deferred tax value, right? Loan receivable has a carrying amount 100. Loan receivable is a double entry accounting. Loan, you have grant loan, cash credit, loan receivable debt. So tax purpose also there is no tax consequence of loan. So if you pass the double entry for tax purpose, still you can say cash credit, loan receivable debit, because that has no income expense. So then the tax base also say tax base also 100, carrying amount also 100. So since the both tally, no temporary difference. Then you can take this for liabilities also. Now current liability include accrued expenses with the carrying amount 100. Related expenses will be deductible for tax purpose on cash basis. Salary, right? Salary, just assume, right? Salary is deductible only when it is paid. That is the tax law. You have accrued salary not paid. You have debit expense for accounting purpose, credit accrued expense liability. So carrying amount 100. Related expense will be deducted for tax purpose on cash basis. So cash basis you can't debit for tax purpose you can't debit salary expense. So you can't credit accrued expense liability. So then tax base is 0. Now we have a liability carrying amount 100, tax base 0. So the difference is taxable or deductible. Then make a carrying amount accrued expense 100 because you debit the relevant expense. Relevant expense tax on cash basis means no debit to expense, no credit to liability. So tax base 0. Now carrying amount 100, tax base 0. Of a liability. Asset එක නම් මේක taxable. Liability එක නම් deductible. So this 100 difference is deductible temporary difference. That will create deferred tax asset. Deferred tax asset. එද මේ වියදම මේ අවුරුද්ද tax කරන්න අඩු කරලා නැහැ. Right? අපි accrual basis එකේ accounting වලට අඩු කරා tax වලට අඩු කරලා නැහැ. ඊළඟ අවුරුද්දේ ඔක ගෙවනකොට අඩු කරන්න දෙනවා. So the difference will, this temporary difference will create deductible temporary difference. So this is a deferred tax asset. Right? Very happy. In relation to liability, when the carrying amount greater than the tax base, the difference is deductible temporary. Right? Asset එක carrying amount එක tax base එකට වඩා වැඩි නම් taxable. Liability එක carrying amount එක tax base එකට වඩා වැඩි නම් deductible. So here carrying amount 100, tax base nil. So difference is deductible. That will create deferred tax asset. Current liability include interest revenue received in advance with a carrying amount 100. Interest received in advance. Accrual basis, the interest for next year we have received. So we debit interest received in advance. Sorry, we debit cash, credit interest received in advance liability. Related interest revenue taxed on cash basis. And a tax purpose or double entry cash debit, interest income credit. So tax base of the interest received in advance 0 because there is no such liability as per the tax law. So again, carrying amount 100, tax base 0. There's a 100 difference, which is deductible temporary difference, which will lead to a deferred tax asset. Right? Current liability include accrued expenses with carrying amount 100. Related expenses are already deducted for tax purpose. දැන් සමහර වෙලාවට වියදම් තියෙනවා බොහෝ වෙලාවට accrued expense tax වලට අඩු කරන්න දෙනවා. right? ගෙවවද නැද්ද කියන එක අදාළ නැහැ. So in that case, the carrying amount 100 of a accrued expense. ඒ කියන්නේ accounting වලට අපි expense debit කරා accrued expense credit කරා. Tax purpose also, you can debit expense, credit accrued expense. That means tax base of this is 100. So the tax base also 100. Carrying amount 100, tax base 100 means no temporary difference, no deferred tax liability or asset. Current liabilities include accrued fines and penalties with the carrying amount 100. Fines and penalties are not deductible for tax purpose. Tax purpose deductible නැත්තම් expense එක that create a permanent difference, disallowable expense, which doesn't create temporary difference. From that perspective, since we want to take the temporary difference 0, since the carrying amount 100, you can set the tax base also 100. So under this analysis, there is no deductible temporary difference. Right? Carrying amount එකත් 100, tax base එකත් 100. Alternatively, if you go ahead with the double entry as per the tax law, now current liability include accrued fines and penalties. So accounting purpose, we debit expense, credit accrued expense. Tax purpose, since fines and penalties are not tax deductible, you can't debit expense. So there is no liability. Then under that approach, tax base of liability is 0. Now we have a difference. Carrying amount 100, tax base nil, 0. But still tax rate 0 now, because this is not tax deductible. So both approach, there won't be a deferred tax asset. Right? ඒ වගේ අපිට situation එකට අනුව match කරගන්න පුළුවන් වෙනවා. Right? Substance එක බලන්න ඕනේ. When you identify whether if there is a permanent difference, that means which is never reverse. The tax වලට අඩු කරන්න දෙනවා, දෙන්නේ නැහැ, accounting වලට අඩු කරනවා. වියදම. ඒක temporary difference එකක් එන්නේ නැහැ කියලා ගන්න. එහෙම කරන්න නම් tax base එක දෙමුනක සමානයි කියලා ගන්න. එහෙම නැත්නම් අපි සාමාන්‍ය විදිහට accounting වලට වගේම tax base එක හොයන්න double entry තියනවා කියලා හිතුවා. Tax law එකට. Here you say the tax base of this accrued fines and penalties 0. මොකද අපි debit කරන්න එකක් නැති නිසා credit කරන්න එකක්. Now you have a difference 100, but multiplied by the 0 rate because it is not tax deductible. So then again, no deferred tax asset, no deferred tax liability. Right. The deferred tax liability, the amount of income tax payable in future period in respect of the taxable temporary difference. Taxable temporary difference එක නිසා අනාගතයේ ගෙවන්න වෙන tax එක තමයි deferred tax liability එකෙන් පෙන්නන්නේ. Deferred tax asset, amount of deferred tax recoverable in the future period in respect of deductible temporary difference. ඒක දැන් අපි කතා කරා. Deferred tax asset. Deferred tax liability create only because of taxable temporary difference. Taxable temporary difference multiplied by the tax rate, you get the deferred tax liability. But deferred tax asset, deductible temporary difference into tax rate is only one way. Right? There are two other methods we can identify deferred tax asset. But these two are very rarely applicable. Carried forward unused tax losses. Now, if a company calculates the income tax, if you ended up with a tax loss this year, 10 million tax loss, so you are not paying income tax this year. Suppose that next year, if you earn 30 million tax profit, now it is unfair to pay tax for 30 million because last year tax loss 10 million. Say tax rate 30%. Right? Tax rate 30%, 10 million tax loss last. So that tax loss can be carried forward to next year. Next year taxable profit 30 million. From that you can deduct this 10 million tax loss. and pay tax only for the 12 million. So you can recognize 10 million carried forward tax loss into 30% deferred tax asset. So deferred tax asset can be recognized for carried forward unused tax losses. Deferred tax asset shall recognize for carried forward unused tax losses. Suppose that in the future you will be able to generate profit and the inland revenue or the tax authority allow to carry forward the tax loss. සාමාන්‍යයෙන් අවුරුද්දක් දෙකක් තුනක් කාලෙක එක වෙනස් වෙන්න පුළුවන්. tax loss carry forward කරන්න දෙනවා. ඒතර මේ අවුරුද්දේ loss තිබිලා ඊළඟ අවුරුද්දේ profit ආවොත් අර අඩු කරගෙන තමයි tax ගෙවන්නේ. ඒ වගේ වෙලාවක අපිට deferred tax asset එකක් අඳුර ගන්න පුළුවන් carried forward tax loss into tax rate. Similarly tax credit withholding tax, right? කියන්නේ කෙලින්ම අඩු කර ගන්නවා මොනවා හරි income එකකින් tax එක. අඩු කරගත්තට අර වගේම දැන් tax එක අඩු කරගත්තා නමුත් taxable profit එකක් නැහැ. ඒ නිසා ඊළඟ අවුරුද්දට ඔය carry forward කරන්න පුළුවන්. Right? Those are rare application. But basically you should know the deferred tax asset, deferred tax liability create based on taxable and deductible temporary difference. And you should know the accounting treatment. Right. So with that, I am moving to the next topic, which is accounting for leases. Accounting for lease. So I hope lease is something you all have heard, something familiar term, right? So what happened in a lease? Agreement between two parties to hire asset. It's an agreement. Agreement කියන්නේ පාර්ශ්ව දෙකක් ඉන්නවා. One party we call lessor, other party lessee. Lessor is the party who owns the asset. So the owner of the asset, legal owner, transfer right to control the use of asset to other party for a series of payment, rentals. So lessor is the owner, lessee is the user. Lease is an agreement. Lessor transfer right to use the asset to other party. For that, lessee pay rental. The party who transfer right to control the use of asset is the lessee. Party who obtain right to control use of asset, lessor. The accounting treatment we can discuss from both lessee's perspective and lessor's perspective. දෙපැත්තෙම අපිට accounting treatment එක කතා කරන්න තියෙනවා. Right? The relevant accounting standard is SLFRS 16 leases. SLFRS 16 leases. So the SLFRS 16 applicable for all leases except for two scenarios. For a short-term lease, we are not applying the SLFRS 16 guideline. Short-term lease means the lease term, the lease period, less 12 months or less. අවුරුද්දක් හෝ ඊට අඩු කාලයකට නම් අපි asset එක lease කරන්නේ. ඒක short-term lease. දැන් මම හිතනවා leasing A level වලටත් ඉගෙනගෙන තියෙන නිසා you know that for a lease, lessee recognize right of use asset and lease liability. For a short-term lease, that is not applicable. Short-term lease means you enter into lease agreement for 12 months, less or less. For example, you lease a motor vehicle for a period of 6 months. Monthly lease rental 100,000. In that case, lessee recognize the lease payment as an expense. Straight line. Monthly you are paying 100,000. You charge that into PL. No right of use asset, no lease liability. For a short-term lease.
The other scenario, the lease for which underlying asset is very low value. Lease කරලා ගන්නවා. Right? සමහරට අවුරුදු දෙකමාරක් lease කරා වෙන්න පුළුවන්. But the lease asset value is say 25,000, 30,000, something like that. Right? So that not 100,000 වෙන්න පුළුවන්, but compared with the other value of the assets of the business, that is much small. No need to capitalize. ඒතර මේ වෙලාවට rental එක P&L charge කරන එක තමයි කරන්නේ. Except these two cases, normally lessee recognize for a lease asset both right of use asset and the lease liability. When we enter into lease agreement and obtain right of use of motor vehicle, machinery, equipment, building, whatever, you have recognized right of use asset and lease liability. So you should know the accounting treatment. How do we measure right of use asset initially and subsequent? How do you measure lease liability initial and subsequent? Right. That is what we should know about the accounting for leases in the books of lessee. Lessee ke පැත්තේ right of use asset එකයි lease liability එකයි අඳුර ගන්න. ඒත් අපි දැන ගන්න ඕනේ කොහොමද initially මේක measure කරන්නේ, subsequently measure කරන්නේ. Right. So at commencement date means the date that the agreement entered. Lessee recognized right of use asset and a lease liability. The right of use asset represents lessee's right to use the asset for the lease term. Lease term is lease period. We enter into a lease agreement and obtain right of use of a building for a 5-year period. We should recognize asset. You have right to use a building for a period of 5 years. You enter into lease agreement and acquire right of use of motor vehicle for a period of 5 years. So that is your right of use asset. So at the right of use asset, initial recognition measured at the cost at the commencement date. Cost එකට measure කරන්න කියලා කියන්නේ. Right of use asset. Okay. Okay.
Is the majority of the single students are here. We have come for the families and Muslim religious brothers to celebrate and get experience. Like this time also we are going to have a Ramadan also celebration. From your batch, I think I saw that some students they have mentioned that they are going to partner your senior batch. From your batch also maximum participation expenses for it. Because I know you have spent extra money for the treatment. Now, some economics are difficult, but however, with a very less amount they are asking. So that give the conclusion. Participation is compulsory. There's no lectures to it there. We are arranging the additional lectures because there is something like actual schedule is conduct exam. Don't worry about that matter. But your participation is either requested as senior guy or just school years like that. Of this type of event is very important. And also when you are going to the or you are working with people, however, if you have a degree, then they are asking that what are extra activities you have done. After revealing that, you organize like that. So that your support also essential. When we are issuing the certificate, we can mention that it's a contribution that you have done. So that I think that when please discuss it that your friends and give the support only next day, like next Saturday. The army is there. So your support and also Mr. Anand that said that aspect before that guys give this information.
Well, as we found earlier, the processes are around the ground location with the coordinators. And we are advanced participation. And we expect everyone's contribution and participation today since everyone will be making regularly of the event. So if everyone will be giving your contribution and the participation, I hope your important is around the contributions, right? So you can, if you give the participation certification today, so it will be also ready to accommodate the reflection of the professional and stuff. So if you are able to give the participation today, so it will be helpful and we, other than that, we expect everyone's participation will all, if everyone participate in it, so we can make that given. Other thing about the dress code, we can concerns about the dress code. So for boys, we can given weight, we can share. So if you are unable to then we also can give 5 stars. We have given alternatives for that also. And for girls, we have given saris. So if you able to wear sari, that would be nice. If not, so you can wear any cultural related shalwars, or you can wear the designer and shorts. So we have given alternatives for that also. So hope everyone there, hope there is no issues with that. Everyone, we expect everyone's participation on that day. We can experience new things because we have arranged the cultural things as well as events as well as entertainment things also. So there are games as we arranged, so you can participate in that also. So hope everyone will be participating on that. So if you have any concerns, you can chat us anytime and so if you have any concerns, you can give us. If you have concerns, Graduation from 9 to 5. Around 9. We have days also. Like morning, they have the cultural events. After that, we have the dances. Wish to participate in dancing or wish to that's what we also find. It's open to
I think problem is that they are in not they are in a paper. So put a big bear. The India they have that our restaurant they have where town and girls they have where at the end. There was no trouble. No problem. But it's a new experience. Even first time that I am going to this for Typhoon and Pramusa. So it's a good experience and also I have the prejudice and I have some idea how they until maybe the most of Srilanka we always have a attitude that laughing and looking for the other regions and the raising matters. I don't do that. And also we should have a good understanding of the other is the you saw that the Japan University they are doing there. And they are doing the puja, I saw that in YouTube and they know temple. That's the way that the family students they are treating the single guys there. But we have trained the family guys here. Then our country will be maybe bodies that are doing corruption and everything, but as a society members, then we have to suppress something that regarding other religious events and everything. So that the final experience of what I don't know pressure because you have Indian guys. So give the support for event. And copy the event. But don't worry that they are not there, but however we will manage with the future. Thank you. Thank you.
Right, so I think this is something important even, right? So when you become graduate, right? So normally university means so many extra activities, right? So here you have limited opportunities, right? So when you have those things, you better involve based on your capacity. All that will create some kind of value addition, right? For your life. Something may not be very much tangible, right? But when you accumulate those things, right? Those extracurricular activities that help in your career, right? In a different way, right? So now lease asset, we call right of use asset. Now, how do we measure the right of use asset? Right of use asset measure initially at cost. So what is include this cost? The amount of initial measurement of lease liability. When you enter into a lease, here you see that there is right of use asset and corresponding lease liability. The amount you credit to lease liability is debited to lease asset, right of use asset. So right of use asset consists of the first amount, the amount of the initial measurement of lease liability. You enter into lease transaction, a lease agreement, and obtain right of use of motor vehicle. The lease liability is 5 million. That 5 million we credit lease liability, debit right of use asset. So one component of right of use asset is the amount of lease liability. Then some leases, you have to make a down payment, initial payment. Especially, right, your lease a motor vehicle. Motor vehicle value is 5 million. You can't lease for the full 5 million. You will ask to pay 2 million down payment, balance 3 million you can lease. So then initial measurement of lease liability 3 million. That you credit lease liability and debit right of use asset. And you are paying 2 million down payment. That you credit cash and debit right of use asset. So any payment made or at or before the commencement date. Those are the initial payment, down payment. That became part of the right of use asset. Then like property, plant and equipment, when you are acquiring asset, there can be a direct cost, initial direct cost. That you purchase a land, there may be legal charges, right? Some brokerage fee or something like that. Stamp duty. Same thing applicable for leases. So the initial direct cost incurred by lessee. Initial direct cost incurred by both parties, lessor and lessee. Now we are referring to the lessee's book. So lessee should recognize initial direct cost incurred by lessee. Then rarely applicable, the estimate of cost to be incurred by lessee in dismantling and removing underlying asset and restoring site. This is applicable for certain type of plants, machineries, right? This is same as PPE, property, plant and equipment, right? You install particular machinery which can be used for 5-10 years. After 10 years, you have to remove, dismantle that. You can't just let it as it is and prepare the site free, right? Because sometimes this manufactured process might create some kind of chemicals, right? So you have to get it clear. So you have to remove, dismantle, and restore the site as previous. So in that case, if you are going to incur that cost maybe after 5 years, 10 years, but you have to estimate that cost, discount it, and take the present value. That should be recognized as part of cost of the asset, debit asset, creditor liability provision. Right. So that is applicable for PPE. Same rule applicable for here. If you have leased such an asset like plant and machinery. But most of the cases, it is the initial amount of lease liability and initial deposit plus initial direct cost, right? This one rarely applicable, right? Then what is this lease liability? How do we measure the initial measurement of lease liability? The lease liability is the present value of the lease payment that are not paid at the commencement date. That means the future lease payments to be made. You take all the future payments that is going to be made under the lease agreement, discount them and take the present value. You know that discounting and taking the present value, you learn in the NPV calculation, right? The same rule applicable. So year 1, year 2, year 3, likewise over 5-year period, you are going to pay lease rental. It can be many different type of payment. All those payment take the present value. That is the measurement of lease liability, initial measurement of lease liability. To take the present value, you have to discount the cash flows. Say we are going to pay 1 million each over next 5 years for a machinery release. Now you have to discount those 1 million payment. So what is the discounting factor? The lease payments are discounted using interest rate implicit in the lease, if applicable. In certain leases, there is interest rate in the lease agreement, right? Leases we are going to classify as finance lease and operating lease from the lessor's perspective. Lessee's perspective, we are not using that classification, right? So lessor's perspective, you can classify leases as finance lease and operating lease. Finance lease, the interest rate implicit in the lease is there. So you can use that interest rate to discount. In a question, you will be given the lease interest rate. But if the lease is an operating lease, there is no implicit interest rate. In that case, you have to use the lessee's incremental borrowing rate. That means if the lessee is going to obtain a loan and take this asset, there will be an interest that you are going to pay. Incremental borrowing rate. අලුතෙන් loan එකක් ගත්තා නම් ඒ loan එකට කොච්චර interest එකක් ගෙවන්න. You can use that rate, right? So whatever it is, it will be given, right? In your case, you should be given that. Practically, if the interest is there in the lease agreement, so from the lease implicit interest is there, you can use that. Otherwise, you can use the incremental borrowing rate. Right. So what are the lease payment? Mainly, most of the cases you will have this fixed payment. Fixed payment. Fixed payment to be incurred by lessee. Fixed payment. So 1 million into 5 installment, right? That is the fixed payment. Very rarely there can be variable payment, right? Lease installment is not fixed. It is linked with the kind of index, right? Consumer pricing index or some kind of any other rate, something, right? Variable. So fixed payment or variable payment. Then amount expected to be payable under the residual value guarantee. In some leases, normally you have pay, okay, you are paying 1 million over 5 years for a lease. Under that you acquire asset, say motor vehicle. End of the 5 year, you have to pay another 500,000, then only you will get the ownership. So that final 500,000 you agree to pay guaranteed residual value. That also part of the lease payment. You take it. In certain lease agreement, lessee is given option to purchase. And that price is a very small nominal price. So it is very much certain that lessee will make that payment and get the ownership. In that scenario, the purchase option price also lease payment. Sometimes there may be lease agreement for 10 years, but as the lessee, we want this asset only for 7 years. So we negotiate a termination option. After 7 years, we can terminate by making a payment termination fee. So if our plan is to terminate after 7 years, then you can take the lease payment up to year 7 and the termination fee that you are going to pay. Those are the lease payments. So all these lease payment you can estimate that if they are in the agreement, you can discount them and take the present value. That is the value of lease liability, right? So we'll go to this activity one first. ABC PLC acquired a machine on lease basis 1st April 2019. The following information is provided. Initial payment 200,000. Down payment. Installment, 4 annual installment. What the date, right? This should be 2019. Because agreement is on 1st April 2019. So the down payment made on the same day, 2019. Then the installment 150,000 into 4, starting from the 2020, after 1 year, first installment. Likewise, you are paying. Guaranteed residual value, end of the lease 20,000. Initial direct cost incurred by lessee 30,000. And interest rate implicit in the lease 15%. That is the discounting factor. The amount of lease liability on 1st April 2019. So you have to estimate the lease payments 150 into 4 plus 20,000 in the 4th year guaranteed residual value. Discount using 15%. So the discounting factor, you know how to calculate it, 1 divided by 1.15. Second year, 1 divided by 1.15 to the power 2, power 3. Likewise, you can calculate it. But FR, you will get the discounting factor, right? You can use even the present value table. Or normally, examination perspective, you will be given this, right? The make it mang uttareti denna gana hadara kota 15% discounting factor for year 1, 2, 3, 4, 4 years. Because this is not the finance cost, you learn how to calculate it in the finance. Here, the discounting factor will be given, right? So then, first we can take the initial measurement of lease liability. Now, lease rentals, 4 lease rentals. $150 each. And the guaranteed residual value applicable for the year 4, 20,000. So altogether, you can have the lease payments. And I'll give you the discounting factor. 15% discounting factor. 0.8696 7561 6575 and 5718. So finally, you can have the total. So the initial measurement of lease liability. $439,686. Then we have the right of use asset. So right of use asset basically the initial measurement of lease liability, same amount you can take. Then the down payment, the initial payment, cash credit, debit, right of use asset. And any initial direct cost. That also we credit, cash and debit, right of use asset. Altogether, initial measurement of lease liability, initial measurement of right of use asset is 669,000. $669,686. Yeah. Now we can prepare the ledger accounts, right? So the activity 2 consider the information given in activity 1. Assume the useful life 4 years, lease term 4 years, useful life 4 years, no issue. So we can depreciate the asset over 4 years. Relevant ledger accounts in the books of lessee. Right, we will prepare for the first 2 years. So we can have basically right of use asset account, lease liability account, and accumulated depreciation account I will prepare. These 3 accounts for the 2 years, 19, 20, 2021. So the first few entries we can easily make. Now, right of use asset, like lease liability value, we have already calculated the value of lease liability, 439,686. Lease liability credit, right of use asset debit. Then the down payment, cash credit, right of use asset debit. Initial direct cost, cash credit, right of use asset debit. This is what we have already found, right? You can show the double entry there. Not preparing the cash account, right? So the lease liability, initial measurement, lease liability credit, right of use asset debit. Down payment, cash credit, right of use asset debit. Right, initial direct cost, cash credit, right of use asset debit. Then let me asset එක depreciate කරන්න ඕනනේ. The value of the asset, you calculate the value of the right of use asset. Carried forward balance 669,686. We can depreciate it over 4 years. So you can calculate the depreciation expense 167,447. We can credit accumulated depreciation, debit PN. ඕක accumulated depreciation වලට දාලා P&L කරන්න පුළුවන්. Then we are settling the lease liability. Annual installment 150,000. So you pay the first installment, cash credit, lease liability debit, installment. Asset you can brought forward the same balance to next year. Now this 150,000 include interest. This is the liability, 439,686. We are paying 150 into 4, 600,000. Liability is 439. We are paying 600. The difference is the interest. How much is the interest for the first year? You can simply calculate opening lease liability multiplied by 15%. 439,686 into 15%. You can charge to P&L lease interest 65,953. So the lease liability carried forward the first year 335,000. And accumulated depreciation can carry it forward, brought forward to next year. Okay. Can you work out second year? Just depreciation, interest, and the installment. Right. Now the second year, we are paying, you can calculate the second year also, we can pay 150,000. Now interest for the second year, $355,000 into 15%. So which is 53,346, and the depreciation won't change, that you credit to accumulated depreciation. So asset account, we can carry forward the same balance. $669,000. Now accumulated depreciation account, we can carry it forward 334,000. Lease liability account, we can carry it forward 258,000. Right? So then we can find the financial statement extract. You are asked to prepare the financial statement extract. So the interest for the first year 65,000, second year 53,000. Depreciation expense 167,000. So the depreciation and the interest you can take from the ledger accounts. The right of use asset can show the value of asset minus accumulated depreciation. You have the carrying amount, net book value. So the statement of profit or loss and OCI extract. Right. Now, this lease liability, first year lease liability 355. This is to be settled in next 3 more years, right? 3 more years. So part of that going to settle in the second year, that classify as current liability. When you have a liability, non-current long-term liability, it is paid in installment, part by part. You have to classify part of that payable in the next year. Bank loan එකක් වුණත් එහෙමයි අවුරුදු 10ක loan එකක් අරගෙන තියෙනවා නම්. Bank loan is a non-current liability, but the amount payable in the next year you have to classify as current. Now here the lease liability 355 remaining balance payable in 3 more years. The amount payable in the next year you can find current liability. The current liability is next year installment is 150. From that you deduct the second year interest 53,000. So the real repayment of the liability in the next year would be 100. Repayment of liability would be 96,000. $655. So out of the total liability 355, 96 payable in the next year, the balance current portion 258,000, 985 non-current portion. මුළු liability එක 355. ඒකෙන් දෙවනි අවුරුද්දේ ගෙවන්න තියෙනවා 96. How you get that? Next year installment 150 minus next year interest. Repayment of the lease liability is 96. The total lease liability 355. From that 96 payable in next year. So it is 258 non-current part. දෙවනි අවුරුද්දේ 258 තියෙනවනේ. දැන් ඔය 258 නැවත දෙකට බෙදන්න ඕනේ. අපිට බලන්න පුළුවන් තුන්වෙනි අවුරුද්දේ interest එක කීයද කියලා. මෙන්න මේ 258 වලට 15%. Interest applicable for the year 3. එහෙනම් අපිට පුළුවන් දෙවෙනි අවුරුද්දේ liability එක බෙදන්න 150 minus 38,000 interest. So current portion is 111. Then from the 258, when you leave out 111, 147 is the current portion. Right? මේ මම මේ පැත්තේ පෙන්නලා තියෙන්නේ 2020 liability එක බෙදපු හැටි. මේ තියෙන 2021. Right? So always next year payment you have to find. So the installment minus interest for the next year. That is the repayment of liability. That is the current portion. From the total outstanding liability, you deduct the current liability, balance is not current. Right? Okay. So we just started the leasing, right? Lessee's book, the very basic first activity we finish, right? But basically lessee's book, this is all about, right? You have to record the lease liability, right of use asset, to depreciate the right of use asset, and lease liability reduced when you settle it. You have to classify it between current and non-current. Right, so we can continue the discussion next week. So 28, I think no issue, right? We'll have the lecture as usual. So we can complete the leasing part. And I will check on your presentations, right? හැබැයි අපිට presentation එක තුන්වෙනිද 4 වලගේ වැටෙන්නේ. Third week, 4th, 5th, 6th, right? Okay. Check. You better go ahead. I have allocated you the topics last week, right? So you know the standard, so you can work on it, right? Okay. So we'll give you the break, lunch break.